What on earth are interest rates doing at the moment? How high are they going to get? What affects how high they go? How long should we fix our mortgages for? All the answers to these questions coming up. Hey everyone, welcome back to the channel. My name is Adam. I'm an expert mortgage broker, and today we are talking all about interest rates. What affects the interest rates? How long should we fix our mortgages for? What's going on in the market right now? It's all a bit crazy. So if today's video is useful, give us a thumbs up, subscribe to the channel. There's more and more content. Try and do a new video every week for you. So let's get into it. Now I'm going to try and keep this as absolutely simple as possible. So, if you're a keen reader of the Financial Times, this video's not going to be for you. This is going to be teaching you to suck eggs probably, but this is for the rest of us who are a little bit confused with what's going on right now. So let's think about interest rates then. So we all know about the Bank of England base rate, that gets announced all the time, doesn't it? That's always in the media. At the start of the year, the Bank of England base rate was really, really low, like record low, lower than it's ever been in the history of the Bank of England base rate, really, really low, which meant that interest rates are low for everything else, mortgage rates, savings rates. Unfortunately, if you've got savings, then the rate is low as well. Loan rates, basically rates are low. But over the last few months, so it depends when you're watching this, obviously, but it's kind of the very beginning of October right now. So interest rates have been going up the last few months. The Bank of England has been putting their rate up. But when it comes to getting mortgages, the mortgage lenders, they borrow money off each other and they borrow money from various different places to then lend to you. But they don't borrow that money at the Bank of England base rate. So the Bank of England base rate, whilst it has a bit of an impact on mortgage rates, it isn't the be all and end all. If the Bank of England goes up by 0.5%, you don't see all mortgage rates suddenly go up by 0.5%. Mortgage interest rates have been going up kind of independently of the Bank of England. The rates have been going up all the time lately anyway for mortgages. So the Bank of England base rate going up doesn't necessarily directly impact mortgage lenders. Mortgage lenders borrow money from different places at what we call swap rates. Now, you can Google that if you need more information on what a swap rate is, but it's basically the rate at which the mortgage lenders get their money. So they borrow the money to then lend to you, and the idea is they lend it to you at a slightly higher rate than they're paying to borrow it, and there's their profit. Now, some banks and building societies don't just get money that way. They have savings accounts as well, so they'll lend that money out to people and things, but that's a whole other subject. But basically, the mortgage lenders borrowing money at a rate to then give to you or lend to you. Now that rate, that swap rate, has been going up, and actually over the last few weeks has rocketed up. Now it didn't help, so the new government came in, Liz Truss, bless her, she's come in and made a mini budget, and we won't get into the whys and the wherefores of that now, but we saw the pound plummet, and that really had a knock-on impact to these swap rates. Everything is affecting these rates at the moment. The world, Russia and Ukraine, and gas prices, electric prices, everything affects everything else. It's all sort of linked together. So basically, these rates have been going up. So that means it's been getting more expensive for the mortgage lenders to get the money to then pass on to you. Now, it needn't be all doom and gloom though. So people way cleverer than me, economists and all the banks and building societies, they all have very, very clever people that think about what is likely to happen in the future, and that's how they set their rates and things. And obviously in this industry we get to hear from those people from time to time. I would say general consensus is, now I should probably caveat this is general consensus and my thoughts, and definitely not a prediction of the future or a guarantee or anything like that, just in case anyone thinks I'm predicting the future here. But general consensus is that we think rates will carry on going up for a little while, for the next year or two maybe, but then the indications are that we think they'll probably settle down, calm down, and then maybe even come back down again. To what extent, we don't know. But hopefully this is a fairly short-term and short-lived problem. Now, if you're looking for a mortgage right now and you have to get a mortgage right now, that may be of little comfort because your rate is going to be higher than it would have been 6 months ago, a year ago. It may even be higher than it would be in 5 years' time. We don't know. But important really to get proper advice and actually sort out your mortgage as early as possible in the process, whatever it is that you're doing. The other glimmer of hope really is that, and this is personal opinion as well as anything else, but right now you can fix your mortgage for 2 years or 3 years or 5 years. So if we take 2 and 5 years, 2 years, the rates are a little higher than it is to fix for 5 years. Now, my thinking in my fairly simple mind is that if lenders thought that these swap rates and everything else would keep going up in the next 5 years, they wouldn't be doing 5-year fixed rates for less than a 2-year fixed rate. In my head, that means they must be thinking that rates will probably start to settle down and come back down again in 5 years, and that's how they can afford to lend money over a longer period of time at a lower rate than a shorter period of time. That's not fact, that's just what I think, but that does give me a glimmer of hope that this is a fairly short-term problem. Now, this is affected, as I said a minute ago, by all sorts of world events, so we don't know what the next couple of years holds for us. This is just kind of where we think we might be now. Asked me 6 months ago and I wouldn't have predicted that we would get quite as high as we have been lately and are continuing to get. So, I don't know, take my thoughts with a pinch of salt. Because we have to think about, politics, the government. The government have got another couple of years, haven't they, to, get us all on side before there's another election. Conflict around the world, obviously having impact on things. Prices of grain and gas and electric. All these things have sort of interwound impact on everything that goes on. So we'll see what interest rates do over the coming days, weeks, months, and then years. But what I will say right now is that it has never been more important to get proper advice about your situation and what is happening, whether it is with us or anyone else. I don't mind, just speak to a mortgage broker because they are the ones that have the latest information. We don't know anything that you don't, there's no secret information, but we know the information as it happens. So it's never been more important to speak to someone that knows that sort of stuff. And it's also never been more important, especially if you're remortgaging, to do that as soon as possible. You can remortgage to a new lender 6 months before your current rate ends, because your new mortgage offer will last 6 months before it expires. Then you have to get a new one. If you have to get a new mortgage offer once it expires, the rate's going to be higher. So 6 months is the key. If your mortgage is ending in the next 6 or 7 months, the time to start looking at it is right now before rates go any higher. And chances are you'll be able to get yourself a okay rate before it goes any higher than that. If you're not due for a few years, then sit back, relax, and don't worry about it. So I hope that has given you a little bit of an insight. There's a way more complex series of events that lead to what happens with the economy, but that's hopefully a little bit of a simple, straightforward guide for you what's happening and what's going on. So if you found that useful, please give us a thumbs up, subscribe to the channel because more information like this coming very soon. If you want to know a little bit more about your own situation and what is available, what rates are available to you right now, visit our website. There's a link in the description below. Visit the website, you can book a call with us. On there, it's completely free call, and we'll happily go through your situation with you and let you know what's available. If not, I will see you on the next video very soon. Take care.